Thanks, Chamberlain. Well, I'm sitting in for Ini this morning. Good morning, good evening, wherever the world you might be watching from. It's Business Morning, and let's get to the top stories that set your agenda. Now, let's start with the oil market. We're seeing a lot of seesaw movement right there. It was green yesterday, but today we're seeing back to, that downtrend back again, $83.52 a barrel. That's what we have for Brent crude, 0.1% down, $79.19 a barrel, 0.4%. That's for the U.S. grade there, WTI. It was trading above $80 yesterday, but now back below that level. We'll see if that actually holds going forward. But an expert I spoke to on technical analysis said that $78 per barrel for WTI, that's the price to watch definitely in this market. Well, meanwhile, it's still oil and gas industry. It looks like Seplat and Exxonmobil have finally reached a settlement agreement deal on the sale of offshore assets belonging to ExxonMobil. This information was contained in a post on the official page of the NNPC Limited this morning. Can be recalled that this deal that was stalled for a while due to issues on cleanup arrangements among other issues. So definitely we have a deal right now when it comes to that ExxonMobil and Seplat divestment deal. Well, let's get a check on the FX market now. See NAFEX appreciated by 116 naira to fix at 1,263 naira. That's for NAFEX. The previous close 1,379. So it's up about 8.39% yesterday for the close. For the NAFEM, though, we're seeing weakness there. It did get to 1,173 naira to the dollar, but now it closed at 1,329 naira. So we're seeing a lot of volatility right there in the FX market. To some company news now, we see Dangote Cement PLC announced final dividends of 30 naira per share. For the period ended December 31st, 2023, the dividend is subject to appropriate withholding tax and approval and reflects a 50% increase against the dividend declared in the previous year. It was about 20 naira last year. So definitely we'll see how that impacts the share price later today. We'll get that close later on News at 10 today. To some other news now, we see payment of fuel subsidy by the federal government has ended, contrary to claims in several quarters, and that's official confirmation made by the Minister of State for Petroleum Resources, Oil, Senator Heineken Lokobiri. He gave the affirmation earlier yesterday on the special program marking the first year of President Bola Tinubu's administration. The minister also highlighted some of the expectations awaiting the country's oil and gas sector in the later part of this year.
As rightly, said, when the day was sworn in, he said subsidy is gone. President was misunderstood, clearly. The last government, Buhari's government, did not make any provision for subsidy in the 2023 budget. So whether anybody said it or not, subsidy was gone. What the president, in his characteristic style of speaking truth, was to say, look, in the last 2023 budget, there is no provision for subsidy, so subsidy is gone. And I can confirm to you that subsidy is gone. But that doesn't mean that, from time to time, there could be strategic intervention from time to time. In the last 1 decade, there has been no investment in the oil and gas sector. Reason? The PIA took longer than expected to be passed, and so there was no stable governance regulatory framework. When this government came, we've been able to rekindle the confidence of the investing community. And I can assure you that between now and the end of the year, we'll do much more than $20 billion. I can assure you that. And the reason why this is happening is because investors now have confidence that there is a stable regulatory framework. The President himself has signed some executive orders that are targeted at assuring the public that, look, Nigeria is ready for business.
All right, time to look at the retail markets in Nigeria. Now we see supermarket sales in Nigeria that rose to the highest in at least 6 years. In 2023, latest report by Euromonitor International shows that formal supermarkets overall sales increased by 24% to 370 billion naira last year from 298.1 billion in 2022. That's in the midst of high inflation and high cost of living at this time. Well, joining us now for this conversation is Professor Uchenna Uzo, Professor of Marketing, Academic Director of the Africa Retail Academy, Lagos Business School. Great to have you on the show. Good morning. Hello, Professor. Hello. Good morning, Professor. Can you hear me? Okay, so Professor, if you can hear me, definitely it's all about inflation at this time. We've seen the inflation numbers for April. We've also seen Q1 GDP data. But I'd like to, Professor, I'd like to get your reaction to the Q1 GDP data that we got. It was higher than the first quarter of 2023, but lower when you look at it month on month. How are you seeing it?
Well, it's first of all, good morning. It's wonderful to be here. Happy to be back here. I see the situation as interesting from the point of view of how the consumer is evolving in this time. So one of the striking things is how more than 90% of the Nigerian consumer spend now goes to food alone, which means that the remaining 10% has to be shared across different products and services they want to have access to. And so this has made consumers to be more careful in budgeting, very, very careful, choosing carefully what they wish to buy. And they are now hunting for the right bargains everywhere. School fees are being bargained for, hotel rates are being bargained for, even taxi rides are being bargained for. And there's a high sense of price sensitivity in the market. The other interesting trend coming from the current situation of inflation is the rise in the second-hand market. So we're seeing that, and by second-hand, I'm not just referring to goods brought in from outside Nigeria that have already been used and sold back here in the country, but I'm also referring to already used Nigerian products that are being sold again to other people to use. We're seeing a rise in that. And then people are choosing to buy in smaller units. The luxury products, the entertainment-based products are now products that are used once in a while. And I think those who consume premium brands increasingly are preferring to consume them socially when they are in events, while when they're at home privately, they are recovering from that huge expenditure by buying smaller or lower brands to recover from the cost. So we are seeing a higher state of brand disloyalty. People are switching to different alternatives because that is what their pockets can afford at this time. So those are the trends that we see.
And talking about this time, definitely dealing with a high cost of living, also dealing with high inflation, highest number in a couple of years at this time. But how would you describe the state, of the Nigerian consumer at this time? We know in other climes, they try to give us data on the strength, of the consumer. So I'd like to get your, how is it looking for you, the Nigerian consumer?
For me, the Nigerian consumer, if I were to use one word to describe the state of the Nigerian consumer at this time, I would say the Nigerian consumer is a hustler. A hustler, I think, is a very good description. Picture a situation of a lady whose name is Kemi, 31 years old, who is a party planner. She's also a lawyer. She's a pastor in church, and she's also a tech guru. The same person has multiple professions, multiple lives, all because she needs to try to earn a good living. And as you go down the social cadre, We are finding people living multiple professional lives, multiple work lives in order to get going, in order to survive in this economy. And it's an interesting trend because those of us in business tend to look at the consumer from one lens only, when there are many other things happening in the life of the consumer. Beyond being a hustler, we are seeing a lot more aspiration in the way people buy and in the way people choose to engage. Nigerian consumers are very aspirational, and even this tough economic time is not taking that aspiration away. The interesting thing that we see is that those at the lower cadre, those that you may call at the bottom of the pyramid, are even more aspirational than those at the higher level in terms of their hope that their incomes will rise, even though the economy is tough and inflation continues to rise. The other bit that is of interest is that we see an increased sense of doing it yourself. So Nigeria is a do-it-for-me market. Nigerian consumers want to be served. They want those who sell to them to give them unique service. And they'll prefer that you do it for them than that they do it themselves. It's interesting that in the banking sector, close to 60 to 70% of those who use banking mobile apps prefer to go to the bank and have the banking agent install those apps on their phones for them than download those apps themselves, which just tells you what the service aspiration is in Nigeria. But I think the most interesting angle of the state of the Nigerian consumer is the level of price sensitivity. Everybody wants a discount, everybody wants a rebate. Even the premium customers right now are looking for better deals. And these are some of the things that I see to be the state of the consumer at this time.
Yeah, quite interesting, the state of the consumer, because every time I go to the supermarket, I get surprised. The items are so few, but I'm paying, so much at the till. But we're seeing data from the NBS that's showing that retail trade was the second highest performer and contributor to Nigeria's GDP in the first quarter. That's after agriculture. Why is retail performance stronger than other major sectors, such as telecom and oil and gas?
So retail trade is huge, and we tend to underestimate it. For instance, in Nigeria at the moment, there are estimated to be over 600,000 retailers, and they employ over 1 million Nigerians. 70% of them are women. And the other interesting trend is that 40% of online and mobile transactions in Nigeria are from the retail sector, which just tells you how retail is the backbone of the economy, the backbone of agriculture, telecoms, financial services, you name it. Retail is omnipresent, retail is everywhere. And it just shows you how perhaps this is the time for the government to also look at policies that will make the environment of retail more friendly, because there's a huge opportunity for growth embedded in this sector. Retail is not just buying and selling, as certain people tend to see it as. It is a science. It is a way of being close to the consumer. And the reason why retail is doing so well is because retail is the closest channel, the closest sector to the consumer. If you want to get to the consumer, you need to go through retail. And that is why I think that's a sector that we need to pay closer attention to.
All right, so there's also a surprising phenomenon there within the retail sector. We're seeing neighborhood supermarkets, outperforming shopping malls, and that was in 2023. And they said the trend is projected, to continue this time. What's your take on that?
Yes, it's real. So supermarkets are outperforming shopping malls in Nigeria. And the reason is simple. The supermarkets are closer to the consumers' hearts than the shopping malls. They are in your neighborhood, they are in your face, they are smaller. They tend to sell certain products at cheaper prices than you will find them in shopping malls. And even in many supermarkets, you find a wider assortment than you would find in the shopping malls where you have more limited assortments at higher prices, and not everything you need is always there compared to a supermarket setting. There's also the social bond that people tend to have with their favorite supermarket, favorite seller. And the supermarkets in Nigeria are getting service right when compared to the shopping malls. We are seeing that they're able to position certain people to attend to people as they buy. Don't forget that Nigeria is a do-it-for-me market, and this is the reason why people are choosing to patronize supermarkets a lot more than they would do. So perhaps there's something that shopping malls should learn. Innovation is also stronger in the supermarkets. So many supermarkets are trying quick commerce. Some have even moved into food businesses. You'll be surprised to find that out, that they are doing food restaurant-based businesses alongside selling in their brick and mortar outlets. And some are experimenting with e-commerce as well. So these are some of the trends we see that are making supermarkets outperform malls, and we envisage that that trend is likely to continue.
Right, and definitely it's a tough time for businesses and consumers, generally. And you did talk about, customer loyalty earlier, but talk to me about how businesses can grow customer loyalty, in Nigeria's current economic state.
Yeah, every business wants to keep their customer for as long as possible, but the reality is that the customers are looking at moving as fast as they can if they get something better. So in order to keep the customer in this difficult, in this turbulent economic times, I think there are three things that would be useful to consider. The first one is consistency. Every business needs to be consistent in offering high-valued experiences, good offers to the consumer. It's very easy to say we offer something, but it's very hard to be consistent at offering that at scale. And that's one of the biggest challenges Nigerian businesses have, consistently offering value at scale. But if you can get consistency right, I guarantee that there'll be loyalty. The second one is transparency. So consumers want us as businesses to be more attentive to their needs, attentive in the way we offer experiences, attentive in the way we run our businesses, attentive to their lives. And the higher the attention to the consumer, the more likely that they want to spend on the brand. And this is what our data we've collected shows. But I think that the third and most important strategy to guide maintaining customer loyalty in this difficult time is flexibility. Flexibility in the sense that we may have started with a business model that worked for us. But what we are realizing now is that last year's future, or the past future, the past, what you might call strategy for success may not guarantee future success. And so this is a time for businesses to be very flexible about how they choose to engage the consumer and to try things that are new and that are different in order to secure this loyalty that we all need. So those are my thoughts in that direction.
All right, Prof, before I let you go, definitely another big issue has been with us for the longest time, profiteering. We see some sellers always trying to take advantage, of the consumer, in Nigeria. Is there a chance we can ever check this issue?
Yes, I believe there's a chance to check it. Profiteering, the problem with profit maximization and profiteering is that it makes the business fixate on success at all costs, thinking that the means will always justify the means. And it makes the business to be too short-term minded when we should be thinking longer term. But there are cases of businesses that are choosing to be more long-term minded and are trying to look for mutual benefit. So it's not about not being profitable, but it's about creating profit, generating profit in a way that benefits all stakeholders, including the consumer, rather than profit maximization. And I think the way to make this institutionalized is just to democratize and show what the data is saying. Businesses that are living just for profit at all costs don't end up surviving in the long term. Whereas those that think about shared value are the ones that end up staying. I think the more we can share this information out there to businesses and guide them, the greater the chances of success.
All right, I guess let's hope the consumer in Nigeria survives 2024. Definitely. Thank you so much. It was great having your perspective, Professor Uche Nauzo, Professor of Marketing, Academic Director of the Africa Retail Academy, Lagos Business School. Thank you so much for coming on.
Thank you so much. It was great to be here. Have a wonderful day.
You too. All right, we'll take a break now. When we come back, we head straight to the commodities market. That's in a moment. Do stay with us. This is Business Morning. All right, let's get a check on the commodities market now, see what's playing out with demand and supply. Dumebi Oluwole joins us, senior analyst at FDC. Great to have you, Dumebi.
Great to see you again.
Yeah, I'm sure you heard the previous interview there. We're trying to find out how the Nigerian consumer is holding on at a time like this.
Yes.
We're seeing food inflation, 40%. Who knows where it's going to be, this month. How are you seeing it?
I mean, we've already seen the trend of food inflation, and we don't think it's going to abate anytime soon, unfortunately, simply because a lot of the issues that are currently fueling food inflation in Nigeria are still very structural. And this is one of the reasons why consumer confidence is left unanchored, even when interest rates are high. Because people are still asking the question, okay, if you increase interest rates, how does that affect the price of gari in the market? Prices are significantly
We've also
skyrocketing.
heard some say the interest rate hikes also stoke inflation. We have that part too.
I mean, but that aside,
yes.
Just looking at how it's affecting consumers is one of the reasons why we keep hammering on the fact that there needs to be a significant cohesion in complementary fiscal policy measures that will support what the monetary policy authorities are doing. Reason being that the monetary policy levers to anchor inflation or even reduce inflation are not enough to reduce Nigeria's inflation as of today, simply because these structural issues, they sit within the basket or sit within the table of fiscal policy authorities. Agricultural productivity is low simply because we're having significant increase in post-harvest losses. Logistics costs are high. Insecurity is still a menace affecting food production. And then when you look at the importation of food into the country, there's still lingering, import control measures that are affecting food supply into the country. In the last Article 4 review by the IMF, that was a significant thing that the IMF hampered on, simply because food inflation, food items, they account for about 51% of the total items in Nigeria's inflation basket. And what that simply means is that an increase in food prices will significantly nudge the headline inflation. So if we don't address the issues affecting food production, and all of this that I've mentioned sits within the fiscal authorities. If those issues are not addressed, we will still continue to see this spiraling inflation that Nigeria is experiencing today.
The central bank governor did say, don't expect a magic wand,
exactly.
At this time with interest rate hike. But let's look at the global oil market. We see how, energy prices play into, global inflation.
Yes.
But we're seeing some movement now. WTI got above $80 yesterday, but back below that at this time. So we're still seeing volatility. What's driving sentiment in that market now? So
it's a couple of things, both demand and supply concerns. On the supply side of things, the expectation is that the markets are expecting that OPEC will maintain its output cuts, and we're seeing I think the meeting is this Sunday. But regardless, that still had a muted impact on prices. We're also seeing the fact that the Middle Eastern tensions as well are still there. That again as well, had a muted impact on prices, at least between yesterday and this morning. But the primary driver are still resident within the demand side of things. And the first thing there is the fact that, number one, U.S. crude inventories at the stockpiles actually increased. And that has an inverse relationship between oil prices. And that's because the expectation would be that demand for gasoline and demand for crude oil will decline from the U.S. 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 inflation data is also coming out this Friday, and the expectations are that the U.S. Fed will keep interest rates higher for longer. So with that as well, the expectation is that demand for oil price, for crude oil and also gasoline will decline. Then as well, you look at the demand side issues from China. So even though the IMF recently, revised upwards their growth forecast for China to around 5%. Yes, around 5%. It's still not giving. Still, the macroeconomic conditions in China still point to bearish demand for crude oil. So the expectation is that with time that demand might pick up, maybe between the end of the second quarter of this year. That's by June. But then again, it will start declining again. The IMF is quite pessimistic on China's growth outlook, and that also fed into market sentiment, especially on the demand side of things. But looking into the coming weeks, especially after the OPEC Plus meeting that will be taking place on Sunday, markets do expect that oil prices will rebound, but the increase might not be so significant.
Right, and definitely most investors just looking at China.
Yes,
at this point, we're seeing IMF, they revised their growth outlook, but they're a big, trading partner, with Nigeria. How does that, impact relations with Nigeria?
I mean, China right now is still keeping up their import and export relations with a lot of African countries. We're not seeing that decline anytime soon, especially as other parts of the West are trying to rebound their own trade ties with a lot of other African countries. The big thing here to watch out for Nigeria and China's relationship is the increase in importation from China, and we don't see that slowing down, at least by so much anytime soon. And the reason is because we're not still producing enough, especially for a lot of the commodities that we do import from China. With China's current exchange rate compared to Nigeria's, we'll still see that China is still a better bet for Nigeria to import a lot of commodities into the country. And the reason why that is not going to slow down anytime soon is simply because, again, I said we're not producing enough. Number two, we also need to keep prices in check, right? So encouraging or leaving imports as much as it has been over the past few months, that is likely to continue. So looking at the trade relationship with China and Nigeria, that's import dependency now, for lack of better words, will still linger for a lot of the commodities that we get from them.
Right. Definitely, we'll keep watching out for China. At this point, because we know how anything that impacts them impacts the global economy. Thank you so much, Dumebi Oluwole, and Senior Analyst Financial Directors Company. Thank you
for having me.
All right, we'll take a quick break now. When we come back, we'll get a check on the markets. That's a moment. Just stay with us.
The Dangote petroleum refinery is going to be the largest single-train petroleum refinery in the world. Dangote Industries have enormous confidence in the potential of Nigeria. Africa is like an unexplored gold mine. We know there is huge opportunities here.
What makes this project different than others is for sure the size. This project is transformation for the country and for the continent, I would say.
The Dangote fertilizer plant will transform the agricultural sector. We go for the state-of-the-art technology. It will help to create employment and to reduce the massive demand on foreign imports. It's going to have a major impact on the lives of the Africans. It's a moment of great pride.
All right, let's get a quick check on the market. Now, yesterday's close, another green close right there for the local boss, 98,818 points, breaking that key resistance level at 98,400 and something points. Volume was lower though, 7.27%. Value, 4.76 billion there. That was traded yesterday. Deal 7,781. So we'll see if we'll get another green close today, and maybe a positive positive week for the local boss. Well, that's it from me on Business Morning. I will give you details of today's close of the stock market later on the news at 10 tonight, and maybe another green close. Thank you for watching. I'm Laddie Williams. I hand things back over to the Sunrise Daily team.